Wes-tone here. In this video, we're going to be looking at Kaspa, the silver to Bitcoin's gold. Today's November 3rd, 2024. Bitcoin is considered to be digital gold. Bitcoin is good for storing and transacting large amounts of money, but it's too expensive to transact small quantities, similar to gold. So there exists a strong market demand for a silver to Bitcoin's gold. Layer 2s like the Lightning Network have attempted to solve this issue for Bitcoin and make it more affordable to transact in small quantities, but in doing so have effectively undermined the very essence of Bitcoin, just like using paper dollars that are supposed to be redeemable for actual gold. But they're indirect and centrally issued, so this solution isn't ideal either. Many other cryptocurrency projects over the years have attempted to solve this issue directly, but were either still too slow because they were based on Bitcoin's algorithm, or cut some corners by going to a proof-of-stake algorithm. Proof of work is the algorithm that Bitcoin uses, and that is necessary for sound money because there must be an energy input in order for it to have value or to function as an economic energy battery. There is no free lunch. You must put energy in to get value out. Proof-of-stake networks are like currency that is conjured out of thin air. Gold requires a huge amount of energy to acquire, and that's partly what makes it valuable. Rocks are not money, partly because they require no effort to acquire. Now, these proof-of-stake networks definitely have useful applications, but not strictly as money. So what is needed is a proof-of-work chain that can handle everyday commercial transactions directly for the entire planet. Kaspa may finally offer the solution. Kaspa is a breakthrough proof-of-work algorithm that is fundamentally different than Bitcoin's, and is able to transact in small quantities quickly for a very small fee. The founders believed they had achieved status of silver because the name Kaspa means silver or money in the Aramaic language. Well, so what? That doesn't mean it'll work. It's just another shitcoin just like all the rest, right? Bitcoin is by far the most significant and adopted cryptocurrency, and all other cryptocurrency prices are primarily driven by Bitcoin's price. But there are only two cryptocurrencies in the entire market of tens of thousands whose price action most strongly follows what is known as power law. And those two are Bitcoin and Kaspa. Power law is a calculus curve or exponential-like distribution curve that when plotted on a log-log chart shows a straight line. Power laws are a natural pattern and have been found even in social media networks when strong network effects of adoption are occurring. This would suggest that Bitcoin and Kaspa have the strongest network effect of adoption in the entire crypto market by a significant margin and stand alone in their uniqueness. All of the charts you see on the screen are power laws related to various Bitcoin metrics, such as price, hash rate, and addresses. And you can see that they're plotted on a log-log chart. That means X and Y scale are both logarithmic in nature, and they all follow a straight line with a high degree of determination. This chart of Kaspa is not log-log, so it doesn't follow a straight line. It's log-linear, so it follows a curved line, but it's still a power law. Now, some would argue that Kaspa is still too young, and there isn't enough data to conclude that a strong power law is present. And more recently, that theory's been tested by its most significant divergence from its power law trendline in its 2 years. Generally on this rainbow chart, we've held this purple band, but you can see we've pretty much extended past the lowest band, which has only happened once when Kaspa was very young. And so many people are concerned that we've broken the power law or that we're going to break the power law. And while I don't know the answers, here are a few points that I'm considering. So there's a guy named Giovanni who was one of the first to identify the power law in Bitcoin's price. He's also aware of the Kaspa power law, and he's the foremost expert on power law, not me. But he says that you need several orders of magnitude of data to confirm or have confidence in a power law. Now, we do have 2 orders of magnitude of data. The price has gone from 0.02 cents all the way up to 20 cents approximately. Is that enough data to confirm a power law? I'm not sure. Here's the price in log-log showing the straight line of Kaspa's price. But this doesn't have the most updated price data. Here's Kaspa's daily volume, which follows a fairly strong power law with a 0.9 R squared, which is slightly less significant than its 0.95 R squared for its price action. Here we also have the hash rate of Kaspa, which also follows a significant 0.95 R squared power law. And this chart is mostly up to date, and the hash rate has not slowed down at all. So it doesn't appear that the network is necessarily failing. Here we have the R squared convergence, which is basically just telling us how the price is converging upon a more stable power law. And you can see it is turning down slightly, but I mean, this is a very slight dip. Because the power law is an adaptive model, it's not a rigid model, it will kind of ebb and flow to fit the data. So this is a very minor decline in the R squared, and I'll show you in a second why I think this is happening and why it's not a problem. But in general, you can see how the price is actually stabilizing and converging upon its power law slope. This is an animated version of that same chart. And here you can see how the price is converging around that power law. So it is becoming more stable and predictable over time. And this would suggest to me that we do have enough data, and that the 2 orders of magnitude that we have is probably the minimum amount of data to be confident in our power law. Power law also offers very predictable price action, and hence is very useful as money because it means a relatively fixed measuring stick by which we can measure prices, asset values, and energy expenditure in general. Historically, gold and silver have been used for that purpose, and gold still functions in this regard, but silver has for the most part lost its monetary network effect and is primarily used as an industrial metal. There's evidence to suggest that as Bitcoin reaches full adoption, the power law will break and become more of an S-curve. And as its power law flattens out, its usefulness as a measuring stick becomes ideal. After all, it can't go up forever, can it? If it did, who would ever invest in a farm that produces food or a factory that produces computers? Bitcoin's rate of return can't outpace the real economy forever. So at that point, if and when it becomes an S-curve, its usefulness as a measuring stick for prices is ideal. Since the supply is more predictable and limited than even gold, people would say it's an even harder money than gold, and the monetary variable is no longer a risk factor for business decision making. Just imagine what this innovation will do for human prosperity. Having a measuring stick such as Bitcoin and possibly Kaspa allow for traders, investors, and businessmen to more precisely measure economic values. This will have systemic effects which allow for more predictable business planning, which means more predictable, stable production. For markets, it means more predictable trading and hence less volatile markets. Inflationary currency disincentivizes savings and incentivizes overconsumption of resources and debt, which is wasteful. This is a chart of Bitcoin dominance, which measures altcoin season, or when altcoins are outperforming or underperforming relative to Bitcoin. I've applied the wealth cycles curve to this chart, and assuming I've identified the fundamental frequency correctly, this would suggest that we are capitulating in altcoins at the moment, which means altcoins are at a rock bottom relative to Bitcoin for this cycle. This is a similar chart showing the same thing, pretty much a capitulation in the altcoin dominance. This chart is suggesting the same thing, a rock bottom in altcoins relative to Bitcoin. This chart is suggesting the same thing, a rock bottom in altcoins relative to Bitcoin. So it appears that altcoin season is right around the corner and that altcoins as a market are at a rock bottom, which I think is pulling down the price of Kaspa outside of its normal power law range. Here's the price of Kaspa and its power law, as well as its power law corridor. And you can see what people are concerned about here. The price is diverging pretty significantly outside of this nice channel. I'm going to take those lines and extend them out into the future. So now I'm going to clarify the high frequency signal, which is just more or less the short-term signals here. And I found that a good fit for that was this 4-week moving average. I'll get rid of the actual price, so we just look at that. And then I also applied the 4-year Bitcoin cycle moving average to try to clarify the 4-year market cycle. And when we do that, we just don't have as much data, and we don't know if this is following a 4-year cycle. But I'm going to suggest that maybe it is starting to synchronize with the Bitcoin 4-year cycle. So because the price is still young here, we don't have 4 years of data, so we don't have a full cycle. We have less than a half of a cycle. And what I think could be happening is something that looks like this, is that we're starting to develop a low frequency cycle that is synchronizing with the Bitcoin cycle. So we saw a long high frequency cycle here, followed by a sideways price action, which is suggesting a little bit of overperformance here, followed by a more significant underperformance here. And being that we are on the edge of altcoin season, I think this is being dragged down with altcoin season. So here I've actually drawn in the Bitcoin 4-year cycle as well as the altcoin dominance or altcoin season cycle. And as you can see, we're in pretty much still rock bottom of altcoin season, just starting to go on the upswing. And I think it's that cycle that's pushing down on our Kaspa price that's caused it to temporarily break its power law corridor. But we're on the precipice of a huge move because we have the convergence of the Bitcoin cycle and the alt season cycle. And right here where those two are both peaking out, we get constructive interference, which causes the most violent peak in those cycles sometime in the early winter, late fall of 2025. And you can see that would really start to emphasize the Kaspa low frequency cycle here. And then of course we get Bitcoin winter, alt season winter, and that I think Kaspa will start to synchronize with those broader market cycles and with the Bitcoin 4-year cycle. And that theory works inside a power law as well, because we can maintain the Bitcoin 4-year cycle, which tends to move all the cryptocurrencies around. Even if Kaspa doesn't have a 4-year halving cycle built into it like Bitcoin, it'll still affect Kaspa, I believe, and begin to influence its price action. So now we're in the scenario where we have constructive interference on the downside. We have an alt season trough. We have a high frequency trough in Kaspa, but we're about to enter a period of a high frequency crest along with an alt season crest, which will constructively interfere on the upside. I think we're on the precipice of some explosive moves in Kaspa and the broader altcoin market. More short term, we could think about this in terms of phase, where we saw this very huge move from June of 23 to November of 23 without very much of a correction. So we've got to work off that energy with a down cycle, and our price only went halfway down the power law corridor instead of retracing all the way down to the bottom, which you could say it probably should have done. Instead, we did the exact opposite during that cycle, and this is what I mean when I say out of phase, 180 degrees out of phase, where our actual price and our, quote, ideal cycle were complete opposites. And because we didn't retrace fully, we took the oomph out of this move here, where we should have theoretically gone to the top of the channel, and now we're in what should be a down cycle, which we are in a down cycle. But when two waveforms are 180 degrees out of phase, you get a null, or essentially in this case a sideways price action. So we're just kind of rounding the bottom of this short-term cycle, this high frequency cycle, and rounding the bottom on this low frequency cycle. And so now that's when you get explosive moves, because you've got constructive interference on the downside followed by constructive interference on the upside when you've got a short and a long-term cycle converging. Anyway, I suspect we'll find out very soon which way Kaspa will play out, given the precipice of the altcoin market that we're on. Also, as I speak, we're days away from an election and rate cuts, so that could definitely throw some volatility into the market. So what is your interpretation? What am I missing? Let me know in the comments section. Only time will tell if this video was a crock of crap. If you like this video, caress that like button. Cuddle that subscribe button. Wes-tone signing off, and we'll see you in the next one.